Kahuina, this is one of the newest developments out in Kaka'ako that's just about to drop, and you're definitely gonna wanna get all the details because they're offering two different products. They have market price as well as those attractive price point, affordable HHFTC units, but there's a big difference between the two, and that's what we're gonna cover today because one could save you tens of thousands of dollars, and the other one could maybe make you a lot more money when you sell. So make sure you stick around to get all the details. All right, guys, so like I mentioned in this video, there is a bunch of new developments out there, but more specifically, we're gonna talk about Kahuina and the HHFTC affordable program that's out there. You may have seen these programs where they have very similar units and they're like $100,000 cheaper, but you need to read the fine print. And there's one package that might better suit your wants and needs. And that's what I'm gonna help you decide today by giving you all of the information, my honest opinion, and helping you understand the difference between the two. Because one might have a higher price tag, but more benefits. And the other one has a lower price tag, maybe not as many benefits, but could allow you to get into the real estate market. Now, before we get into that, if this is your first time here, let me quickly introduce myself. My name is Patrick Long. I'm a licensed real estate agent out here in Hawaii and have been for nearly a decade, helping buyers, sellers, and investors with their real estate needs. Now, with that being said, if you guys want to get in contact with me, need some boots on the ground, head on over to my website, patricklongrealty.com, click contact. We have a contact form right there, and either me or one of my team members will get back to you within 24 hours. Or for even quicker response, feel free to contact me directly. I got my phone number and my email right here, or you can directly DM me on any of my social media platforms. With that being said, let's jump into the difference between market price and HHFTC affordable units. Now, if you're watching this video, you're probably mostly interested in that new project Kahuina, which is actually made up of two towers. Now you have Lamaku, which is going to have about 120 affordable units, the rest going to be market price. And then you have Lamalu, which is essentially going to be 100% HHFTC affordable priced units. Now, with that being said, they do share some amazing luxurious amenities from barbecues, pool, jacuzzi, spa, gym, rec centers, and that is something that's going to be shared by a bridge tower, by an air bridge that connects the two buildings, and it's going to be on the 10th floor. So here's just some photos you can see of some of the renders that they have of some of those luxurious amenities, and not to mention you're going to be in the heart of Kaka'ako. Okay, let's go over what is the HHFTC affordable units. Now, this is a product that's actually offered up to local residents who can actually purchase one of the luxurious condos at a fraction of the current market price for a very similar, almost the exact same unit. So just to give you some examples when it comes to pricing, one bedrooms are about 600,000, two bedrooms are about 700,000, and three bedrooms are coming in at about 800,000. Now that price can fluctuate depending on floor, view, and things of that nature, but that's going to be significantly lower than those market priced units. It's generally about 15% or more below the market price units, which are generally very similar or almost exactly the same, maybe some subtle differences in the finishes. Now, those affordable units do have some caveats, some special things that you need to be aware of when it comes to qualifying, and some items when you own it, what you can and what you can't do. We'll go over that shortly. But now let's jump into the market units. Now, the market units generally are going to be a little bit higher when it comes to price points, but they're not going to have any income restrictions as the HHFTC ones. They'll have essentially not as much string attached when it comes to some of the rules. For example, you can buy a unit and for the first round, you have to live in it as your primary residence, but second round, when they basically don't sell those units, you could purchase it as an investment property and rent it out almost immediately. Generally, they're gonna have nicer finishes, and some of those units, for example, the HHFTC ones, will only have one assigned parking spot. So the HHFTC will have more restrictions on how many parking spots you get, where the market units generally are gonna come with one or two parking spots depending on the size of the unit. Now, the difference again with these market units is some of the finishes are going to be a little bit nicer. You're going to have like built-in cabinets. When it comes to your utilities, you may have more parking than the HHFTC. The HHFTC, no matter what size you have, essentially has one parking spot, where the market units, you could have two parking spots assigned to your unit. Now, the biggest part to this, which is what usually deter people from the market price units, is the price tag. For a one bedroom, 700,000, for a two bedroom, 900,000, and for a three bedroom, 1.3. So a pretty significant difference in regards to price point. So there is some fine print that we want to go over when it comes to the differences and why you see such a large delta in that price. So let's now talk the pros and cons of the HHFTC, and then we'll talk the pros and cons of the market unit. So let's start with the HHFTC affordable unit. So the first pro is definitely going to be the price point. This is an obvious one. You're going to see for a very similar unit, probably almost the exact same square footage, maybe a similar view, you would see a difference of about 15% or more when it comes to the actual price tag. The next pro would be that the requirement for the down payment is significantly lower. For an HHFDC unit, it's only a 5% down payment requirement. Of course, check with your lender. We do have some great lenders, so once again, feel free to reach out to me. Contact information right here. We do have specific lenders who specialize in the HHFDC program because there's a bit more paperwork and understanding and how to qualify for that compared to, let's say, a normal conventional loan. But they're generally only requiring 5% compared to market units, which are requiring a 20% down payment. That's a big difference in regards to money coming out of your pocket. So those are some of the pros. I think this is a great product for somebody who wants to get into the real estate game, somebody who's comfortable with living in that unit for a significant amount of time, because we'll go over that shortly, because that is one of the requirements, and somebody who maybe doesn't have a bunch of cash but wants to get into real estate and you only have to put 5% down. It's a pretty solid benefit and an option for you, once again, if you want to live that luxurious condo lifestyle, but maybe on a tighter budget. Okay, now let's talk some of the cons, because that price tag looks really attractive, but there are some strings attached. The first con is going to be the 10-year buyback period. So you actually have to live in that property as your primary residence for 10 years if you're going to go with the HHFDC affordable units. And if you decide that you don't want to live there anymore and you want to sell it, essentially if you sell it before that 10-year mark, the developer has the right to buy that property at a discount, or essentially at whatever price that they are agreeing to. So that's the buyback period where the developer can buy it back from you. But generally, they're going to set the price, not you. The next con is going to be called SAE, or shared appreciation equity. So how this works, without getting too mathematical, is that they're going to figure out the value of your property utilizing this calculations you see on the screen right here. And basically, they're going to decide that if, when you sell the property, if you made any money or any equity in that, they're going to take a percentage of that on the back end. So essentially, if you bought your unit for $500 and they appraise it and it's worth $700, you basically have a $200,000 worth of equity of delta there. And that's what they're going to calculate on how much they're basically going to be able to take. Maybe it's 10%, 15%, 20%. That's still being figured out right now, but they're going to be able to take a piece of the equity of the money that you made in that property when you sell the property. So that's either going to happen before the 10 years, after the 10 years, it's always attached to you until you pay off whatever that calculation is that they put together for the time of when you sell it. Again, it can be a bit confusing and definitely something you want to dive deeper into to fully understand, because this is an important aspect when it comes to owning real estate and understanding the ins and outs of equity, making money when you buy and sell real estate. This is a big piece that you want to understand fully. So feel free to reach out to me. I'd be happy to dive deeper into it with you. I might even make a separate video that breaks it really down, but I don't want to geek out too much on numbers. Just know that that is a big piece to a con when it comes to these units. If it's something, just keep in mind that is an important con to understand when buying one of these HHFDC units, and that's the shared appreciation equity program. Another con is some of the income restrictions. So if you want to buy one of these units, you might be in a situation where you're too qualified. Maybe you make too much money and you can't buy that unit, you don't qualify for the affordable program. So as you can see on the screen right here, this is the median AMI. Right now, I believe they're offering anybody who's 120 to 140% of the area median income. And as you can see, it changes on the qualifying amount based on how many people live in the household. So if it's you, your husband or partner and 2 kids, that would be a 4-person household. So that would be on a higher bracket of the income. So you'd have to be in that area and not above it. That would allow you to qualify. So that's just one of the many boxes you need to check to qualify to purchase one of these units. Another con is because there's only so much parking spots, they do only give, doesn't matter if you have a 1-bedroom, 2-bedroom, 3-bedroom, only 1 assigned parking stall for these affordable units. The next con would be, of course, back to that 10-year period. If you want to move off island, or maybe that space is too small because you have a growing family, you're not allowed to move out of that property and rent it out. You would essentially be forced to sell it. And if you were to sell it before that 10-year period, you're essentially gonna have to sell it back to the developer at their price and their rate, and or have to pay out that shared equity. So just something to keep in mind. Again, that's a big piece of these programs. Is I think it's a good match for the right person who is planning to live there for the full 10 years. But if there's any thought in your mind that, hey, I'm gonna outgrow this place within 10 years, or I'm definitely not gonna hold on to it for 10 years, this is something we definitely wanna discuss, because this is something that might not make it the best match or worth the money and time to wait for it and things of that nature. Okay, now let's talk the pros and cons when it comes to the market price units. No HHFDC restrictions. So There's no income restriction. You just need to make sure you qualify for a conventional loan and it's yours. There's no shared equity program. There's no buyback period. There's no restrictions other than you have to live in it for a year, depending on when you actually purchase it. After that, you don't have to live in it for an additional 9 years. You can rent it out. There's no restrictions on the price that you actually sell it for. So essentially, there's just not as many strings attached as there is with the HHFDC program, but there's a higher price tag for it. The next pro is going to be the better mix of units. So you're of course going to have higher stacks, better views. Sometimes you're going to have more premium locations when it comes to where it is on the building. You might have more of a corner unit than the middle units, and of course having that extra parking. Third pro is going to be more flexibility. As we discussed before, you have a lot less strings attached. If you do not want to live there after a year, you can rent it out. If you want to sell it after living there for 3 years and sell it at the price that you want, not the dedicated price that the developer or the city is requiring you to sell it at, you can sell it at any price that you want. So I really do like these units when you want to maintain the mindset of real estate and why we purchase real estate. We purchase real estate not only to put a roof over our head, but also to build wealth and to ride that equity train that we see so well out here in Hawaii. Now with HHFDC, they have a little bit more pressure down on that, but of course they have a much lower price tag, so it's easier to get into one of those units. With the market units, way less strings attached. Now let's go over the cons of the market units. The first and obvious, higher price point. So like I said before, you're gonna see probably at least a 15% increase, if not more, if you were to get a very, very similar unit for a different price. So instead of paying $600 for a 1-bedroom HHFDC, for a market unit, you're looking at more about $700. Or if you're looking at $700 for an HHFDC 2-bedroom, you're looking closer to $900. So there's a big difference in price tag when it comes to the market units compared to the HHFDC ones. Second con is going to be higher deposit. So there's more cash out of pocket. Not only the price tag, but the requirement for the down payment. Instead of it being 5% like with the HHFDC, they're requiring a 20% down payment. Now that 20% is broken down over time before you move into your unit. It's not right up front, but it is a larger down payment than that 5% you'd see with the HHFDC units. And the third con would be generally, sometimes you'll see higher competition. If you're trying to get that primo view, there's obviously going to be a lot more people who are not pushed down on who qualifies because they don't have that AMI restriction, going to live there for 10 years and are okay with all those restrictions because that's going to dwindle down the buyer pool a little bit. You're going to have open market. Anybody who qualifies and wants that ocean view corner unit, they're going to be able to compete against you to get that unit. So it might go quicker than some of the HHFDC ones. Now, those are just some of the cons when it comes to the market units. Now let's wrap it up and have a better understanding of who each unit is best for. So you're gonna wanna choose HHFDC program if you check these boxes. Number one, you're okay living in that unit for 10 years. If you're gonna live there less, we're gonna wanna have a discussion about that because the juice might not be worth the squeeze. The price tag's attractive, but there are some strings attached. Number two, if you maybe don't have as much cash saved up, but you can swallow a 5% down payment compared to a 20% down payment, then the HHFDC, if you wanna get into these luxury condos, is definitely the route you're gonna wanna go. And the last thing I would ask yourself is, again, going back to that 10-year period, if you don't think you're gonna outgrow that unit, let's say you don't plan on having any more kids, or you plan on having a kid, but you got the 2 or the 3-bedroom, then yes, I believe the HHFDC could be a great program for you. Now, who are the market units for? Well, the market units are for people who maybe have some extra cash that could put up a 20% down payment. Also, it's a great choice for somebody who wants to ride that real estate train and wants no restrictions whatsoever on whether they can rent it out, whether they can sell it at the price that they want, not the price that the city or the developer requires. If they don't want to have that shared equity, having the developer go into their pocket when they sell the property. And of course, if they don't want restrictions being forced to have to live there or have to hold on to that property for at least 10 years, you have a lot more flexibility. That's who I would have the market unit for. But again, much higher price tag to get into those units specifically. And lastly, if you're looking for the best primo view and corner unit and specific finishes, then of course market unit is going to be a better option than the HHFDC units. Okay, with that being said, if you are interested in learning more about Kahuina and the 2 buildings, I'm going to be making a series of videos going over this entire project for both market units, for both HHFDC, for both buildings, anything and everything you need to know. We're going to cover it here on this channel. So make sure you like, subscribe, and comment so you can get notified whenever I drop videos on this project. Additionally, if you want to get more information about this project or anything when it comes to real estate out here in Hawaii, feel free to reach out to me. I got my contact information right here. You can DM me on any of my social media platforms, and or feel free to check out my website, patrickcallingrealty.com, where I've got a contact form right there where myself or one of my teammates will get back to you within 24 hours. Now, these units have already been released. When it comes to market units, they're releasing them out in phases. They already have 95 units out available right now on the open market. When it comes to the HHFDC, this is going to be a first come, first serve. They're planning on doing the release in January of 2026. So if you want to get in line for this, or you want to set yourself up for success to possibly get one of these units, make sure you reach out to me. I can get you linked up with a lender who specializes in the HHFDC program. Make sure you qualify and get you all lined up, because you need to have your paperwork straight before they basically say, okay, doors open. And once they open it, it's going to be a flood of applications, and it's on a first come, first serve basis. So make sure you reach out to me if you are interested in the market units, HHFDC units, but especially those HHFDC units, because I don't think they're going to last very long. That pretty much wraps it up, guys. I'm Patrick with PatrickCallingRealty.com, powered by eXp Realty. Hope you guys have a beautiful day. I'll talk to you soon. Aloha.